What is going on, you guys? Welcome back to the channel. So I'm going to be doing a quick portfolio update for you guys here, looking at my M1 Finance dividend stock portfolio. Now, I actually had a lot of activity here within this portfolio in the last month, so we have a ton to unpack here. But the biggest change I've made so far in this portfolio is that for the first time ever in my investment career, I have officially started buying bonds. Now, previously, guys, I talked about how I didn't really see bonds as an investment that would make sense for someone like me until I was around, 30 years old or something like that. However, something has changed in my overall financial situation. I'm going to fill you guys in on more details with that. And so as a result, I'm looking to take some risk off of my portfolio just in case I may need to access some of this money later on this year. So we're going to talk about the bonds, what I'm purchasing. We're going to talk about the EV play that I had, which I'm now 100% out of. So that was actually a very short-term trade in this portfolio. And I also picked up one other brand new growth stock that I'm excited to share with you guys in this update. So first of all, right off the bat here, guys, taking a peek at my portfolio, it is now up to a value of a little over $205,000. However, if we take a look here at the last month with this portfolio, I did hit an all-time high here of $211,871 back in early June. So it has come off a little bit from that all-time high, and as you're going to see here in a little bit, when I did sell my EV stock positions, I didn't necessarily time them perfectly, but I am happy with the overall returns that I had made. Now, as far as that EV bet goes, anybody's guess was as good as mine in terms of how long I was going to be holding on to those stocks. Like I said, I thought I'd be holding on to them for a couple of months, but we started to see movement almost immediately with those stocks. And once in a while, guys, you do get lucky and you can time the market well. However, I'm going to show you guys a perfect example later on of how that doesn't always work out, because what ended up happening is I found another opportunity that I wanted to jump on, so I sold off a portion of those EV profits earlier in the month and put them into this other stock. And then finally, this morning, I sold off the remaining EV position and rotated about 25% of my entire portfolio into short-term bonds. And just a bit of foreshadowing there for you guys, the new stock that I purchased has actually gone down a little bit since I bought it. So again, just a perfect example to show you here, guys, that I am not an expert. I'm just some random guy here on the internet. I'm not a financial advisor, and you're going to have some trades where you get really lucky and other ones where, you buy in at a price that you like, and it does, unfortunately, go a bit lower. So before we get into the EV bet here and the numbers, I just wanted to mention real quick that if you are looking to get started with investing, I do have a completely free 30-minute video crash course walking you through step-by-step how to get started with M1 Finance. So if you guys want to check that out, that's going to be the top link down in the description below, or check out ryanoscribner.com/M1-training. And I am affiliated with M1 Finance, so I may earn a commission in the process if you do decide to use that link. Alrighty, so this EV bet actually got pretty dang complicated, so I went ahead and made this spreadsheet just so I could talk to you guys about this trade and then the different points that I sold and how much money I made or lost from the entire process. So as you can see here, guys, I was fortunate in that I made money with every single one of these stocks that I purchased back on May 17th of 2021 in my last portfolio update. So just to refresh, in case you guys didn't see that video, I ended up doing a huge bet on EV SPACs. I've traded stocks like this a lot in 2020. I made some good money on Helion, and so I personally saw a buying opportunity, and in my opinion, I still do think there is room for these EV stocks to go. However, I just decided to pull some risk off the table with reallocating some money into bonds, and it seemed like a good of any time as any to basically sell off my remaining EV positions. But I ended up putting about $4,000 into each of these 5 stocks. Lordstown Motors, I got 525 shares at $7.54 per share. Churchill Capital, I picked up 215 at $18.43. Blink Charging, 131 shares at $30.21 per share. Helion, one of my original EV stocks I made some money on last year. I grabbed 461.4 shares at $8.59 per share. And then Workhorse, which was my biggest winner here, guys. I got shares at $8.12. I picked up 488. And so that was my original EV position on May 17th. So if we fast forward from May 17th to June 10th, we saw a massive rally among a number of these different EV stocks. So this is where I decided to sell off a portion of this bet and move that money into another stock, which is Dave & Buster's. So I'll talk to you guys more about why I invested in that stock in a little bit, but let's cover the first sale lot here of this position. So I ended up selling basically, it looks like about a little bit less than 1/3 of my Lordstown position at $11 per share. And then I sold off about 1/3 of my Churchill Capital position at $26.09 per share. And then I sold off, it looks like a quarter of my Blink Charging position at $39.63. I sold off about 1/3 of my Helion position in terms of the original position here at $12.55, and I sold off a ton of Workhorse at $15.74. So basically what I did here, guys, and this initial transaction is I sold off any gains in those stocks. I sold off the profits and I kept my original cost basis riding. So this was simply the amount I was up on these stocks from my original investment. So in a couple weeks time, I was up about $1,500 on Lordstown, about $1,400 on Churchill Capital, about $1,000 on Blink Charging, about $1,400 on Helion, and an astounding $3,800 on Workhorse. And as I said, I directed most of that over to Dave & Buster's under the symbol play. Now, as mentioned, that has gone down a little bit since I bought it, but I'm going to show you guys that in a bit here. However, today I did sell off the final lot of my EV stocks, and honestly, I might be a big sucker because they have gone down a little bit from where I sold previously, but overall, based on the duration of this trade, I'm very happy with these returns that I've made. So as mentioned, today I ended up selling my remaining shares of Lordstown Motors at $10.41 per share. I sold my remaining shares of Churchill Capital at $23.05. I sold my remaining shares of Blink Charging at $38.97. I sold my remaining shares of Helion at $11.51 and my remaining shares of Workhorse at $14.61 literally just this morning today. So first of all, let's see what the heck these stocks even did today, because I want to see if I actually, made out well by selling them today, or if that was, a terrible idea. So let's start by looking at Lordstown Motors. So I ended up selling the stock at $10.41 per share right around when the market opened. So it looks like it sold somewhere around here at $9.45 in the morning before selling off all the way down to like $9.98 per share. And now we've recovered back to around $10.23. I ended up selling Churchill Capital at $23.05, so that must have been, again, somewhere around here in the early morning trading hours, just after the market opened, and then it went down, it looks like, to a low here of somewhere around $22.84 per share. Now we're back up to $23. I ended up selling Blink at $38.97, and it's already up more from where I sold it, so this was probably not the best timing, but again, I'm happy with the overall gains that I made here. I sold off earlier in this morning here when it was trading below what it had opened at, and then now we have recovered to about like somewhere over $39 per share there. I ended up selling Helion for $11.51 per share sometime this morning, and it did sell off quite a bit, and it went down to $11.31, but now we are back up to $11.64 a share on Helion. And then Workhorse is almost at the exact price that I sold it for at $14.61 this morning, currently trading at $14.62. Now, again, I just want to mention here, guys, if you take a look at the last 2 years here for these stocks, literally all we've seen here is this small bump here from here all the way up to about here. So I'm not saying that these stocks are overvalued. Honestly, at this point, it is hard to say just because of the amount of, speculation and volatility in the market, and many of these stocks are heavily shorted. Now, that's a big reason why I did so well on Workhorse, is because there was a bit of a short squeeze here potentially, or at the very least, retailers herding or basically piling into the stock because of that level of short interest. So that is something that I am paying attention to throughout the rest of this year, is higher short interest stocks with decent fundamentals that I may decide that I want to purchase shares of. So I am entirely out of the EV position. I'm still bullish on these stocks. Who knows, maybe I'll re-enter this position later on this year, but let's talk about now the overall gains from this investment. So my initial cost basis here was around $4,000 for Lordstown Motors, and I ended up selling my entire position for $56.16. So I made $1,654 or a 41.73% return. Churchill Capital, I didn't make as much money. I made about $1,194 or about a 30% overall return in a little over 1 month. After that, Blink Charging, I made about $11.66 or somewhere around a 29.5% return. Helion was my third best investment there. I made $14.67 or a 37% return. And then Workhorse, guys, holy smokes, very rarely do you have a trade this good. I mean, in about 5 weeks' time, 91.73% overall return or $3,600 of gains. Now, while trading does look like fun, guys, and it does seem exciting, keep in mind, this is all going to be maximum capital gains because this is all short-term capital gains. So we're going to discuss that in a little bit as we look at my portfolio, how these types of short-term trades and this type of rebalancing that I'm doing is actually increasing my cost basis over time and resulting in a larger tax bill. So at the end of the day, if you really want to figure out, whether or not active trading is beneficial to you, you have to consider, okay, am I making more money from these short-term trades, significantly more so that it's offsetting the higher tax liability? That's a trade-off that you definitely have to consider. I would say if I was able to book, a 46% overall return, and from about 20 grand, I made about 9,100 in 5 weeks. Obviously, that's not going to happen every time, but if I do have more trades like this, I personally feel that the downside of the short-term trading in terms of exposing myself to taxes does offset, basically the gains from the actual investments themselves offset, hopefully, the increased amount of taxes. However, later on this year, I'll be able to do like a full analysis looking at my original core portfolio and comparing what would have happened if I just left it and did nothing versus jumping around and doing these more active trades. However, I'm going to keep you guys updated every single month here with my portfolio series. So if you want to stay tuned, subscribe and hit that bell in the corner. So looking at my portfolio overall now, you will see that my cost basis is actually $181,000. However, the amount of money that I actually put into this portfolio myself is only $151,000. And the reason why my cost basis has gone up by $30,000 is due to realized capital gains, be it short-term or long-term. So basically, that is the downside to doing these short-term trades in your portfolio, is that you are, stepping up your cost basis, which that's actually not necessarily a problem, because that means that the higher your cost basis is, you would actually pay less in taxes on those gains because of that higher cost basis. However, in the process of raising your cost basis, that is exposing you to taxes. And in my case, it is tons of short-term capital gains. And because I am in that highest bracket, that is a huge, huge difference in terms of the amount of taxes that I'm actually paying. However, as mentioned, I still feel it is worth it to do this. But again, this is something that you guys will have to decide on your own, whether or not you want to do any short-term trading within a longer-term portfolio. So that being said, guys, let me update you on the holdings of this portfolio, starting off with number one here, which is JPST, which is my new bond fund that I've purchased, and I put $50,756 or about 1/4 of my entire portfolio into this bond fund. So we'll cover more on that later. And then also next we have Dave & Buster's, my newest addition. You'll see there I am down about 8.7% or around $1,000. I ended up buying this stock before earnings. I actually visited a Dave & Buster's location myself. I have never seen anything as busy as that in my entire life. My thesis on this stock is that a lot of people are ready to go out there and spend money and do something for fun, but many people are just not ready to travel, or, airlines are just so expensive and you can't even find rental cars. So I think this is going to be the summer of the staycation, where you stay home, but you still spend money and do fun stuff around the house, or closer to your house, I mean. So I think Dave & Buster's is the perfect type of easy entertainment. It's near a lot of people's homes. You don't have to go fly away in most cases. You just got to take a drive. And so maybe this was just what I saw in this South Florida location, but based on their earnings coming in far above analyst expectations, they were expected to have a loss, and they actually posted positive earnings per share. But despite that, the stock did still take a bit of a tumble. So I have no idea, guys, how long I'll be holding on to Dave & Buster's. I'm not even going to make an estimate at this point, because I told you I was probably going to hold on to those EV stocks for 6 months, and then 5 weeks later, I ended up selling them. So this is a shorter term trade here, guys. It's not a dividend play, but it's, again, another stock where I think there's a opportunity to make some quick gains for my portfolio, and then later on this year, redistribute that money into other dividend stocks, or potentially other companies or industries that I see potential in. So regarding the rest of the stocks here, guys, we'll cover those, and then I'll talk about JPST and why the heck I'm buying bonds in the first place. Now, Dave & Buster's is the second largest position in my portfolio, and that is because I want it to carry that much weight. I ended up looking like here, it looks like I have about 11.5K total into this investment out of around 205,000. After that, guys, then we have Logitech. And then another thing I did during this rebalance here, guys, is because I had to account for 25% for this new short-term bond, I had to lower my allocations elsewhere. So I lowered allocations in stocks that I'm personally not as bullish on, and I kept a lot of my money in tech. I'm still bullish on tech for the rest of this year, and so that is where my money is at. So right over here, guys, I have my shares of Logitech. That is my third largest position, and I am up around 17%. We do have IBM. I'm up around 20% in IBM. Texas Instruments up around 5%. Microsoft up around 27.5%. Intel up around 6.8%. So these are most of my tech positions here, guys, and I did lower my allocation of Apple, and that was kind of a tough decision because I had to decide what tech picks I wanted to have, the most weight in my portfolio. And personally, guys, kind of bored with Apple at this point, and I haven't really been excited about what they're doing or their products in a while. I still like the company, but I'm fine with having a little bit less weight in them at this point in time. So after that, we still have Genuine Parts Company up 51.2%. Emerson Electric up 91.2%. Bank of America, guys, I've sold a ton of this stock off now. With the whole meltdown going on here with potentially this, AMC situation and banks having, outsized risk and different ways that they're affected by the fallout of large banks and the domino effect. Personally, I'm fine with having less weight in financials overall. And you'll notice here, guys, that I have a heck of a lot of money invested in tech up here. These are $8,000 or $9,000 positions. And then when we get down to these other stocks, these are smaller, $3,000 to $4,000 positions. So I've sold off a lot of these earlier positions that I bought back in 2020. So Emerson Electric, we had mentioned, up about 91%. Bank of America still up 67%. I've sold off most of that. McDonald's up 25%. Lowe's is up 98.76%. National Grid up 20%. Walmart up 4.3%. Johnson & Johnson up around 10%. Verizon, I am down about 4.5%. However, when you consider the dividends that I've earned, it's probably offset that by now. 3M up around 24%. Apple up around 20%. Procter & Gamble, that stock has really done nothing, but maybe that'll be a winner later on in this year, especially with, if we're seeing more inflation. Procter & Gamble can literally just put their prices up higher, no one's going to complain, and they're just going to automatically make more money. Coca-Cola up 23%, Caterpillar up 44.7%, and Merck, I am down 0.3%. So a lot of money weighted into tech here, and I do have 25% in bonds. So real quick, I'm going to tell you about the bond fund, and then lastly, why the heck I'm even buying bonds in the first place based on my financial situation. And to be completely honest with you here, guys, my expectation with this bond is to lose as little money as possible. Now, I know that may sound kind of weird, but bonds are really no longer an investment vehicle to make money or even preserve your wealth. Because based on the inflation numbers that we've been seeing, even in the last couple years, bonds are still not a very profitable investment. And most people are expecting to see elevated levels of inflation later on this year. So if we start seeing higher and higher levels of inflation, that makes bonds an even worse and worse investment. I am not buying bonds because I'm afraid of the stock market. I am not buying bonds because Michael Burry came out and said everything is going to crash. That is not the reason I'm buying bonds. The reason I'm buying bonds is because I need a backstop for my own personal finances right now. So unfortunately, guys, I have gotten myself into a pretty tricky situation here with this property I bought in South Florida, where I bought a house. It was a flip. It was a house that somebody had flipped, and I am now in the process of suing the previous sellers for basically covering up around $50,000 worth of damages related to plumbing, the roof, and all kinds of fun stuff like that. So when I moved down here, guys, I had to put about $150,000 down on this property. And so most people just don't exactly have another $100,000 sitting around. And that's about how much I've now had to put into furnishing, repairs, etc. So I'm still perfectly fine financially. I have my emergency fund and everything, but I am setting aside some money just in case I have to pull it out temporarily to put towards any legal costs associated with this lawsuit. So kind of unfortunate, guys. And yes, I did have the property inspected. A lot of people were asking me that. It was inspected, and basically it was just a tricky situation here because with these slab houses in Florida, there's no crawl space, there's no basement, and you really can't see what is going on behind the walls or things like plumbing. Obviously, hindsight is 2020. I should have had a formal, sewer line inspection, but with the South Florida market the way that it was, guys, I was in a multiple offer situation, so there was a bit of impatience and rushing. Now, the good news is on the property itself, I am up about $150,000 just because of the housing market in South Florida. That is how much it has gone up since just March when I purchased it. But even so, guys, with the amount of money I've had to put into this house and all of these cover-ups, and even at one point potentially some medical harm from some methane gas we had leaking into the property, I am pursuing legal action at this point. So that is why I am sort of backstopping myself here with that $50,000 being put into bonds with the idea of losing as little money as possible, because the yield from this fund is not going to outpace inflation, and it's not going to be any meaningful return whatsoever. However, it does protect me from massive downside if we are to see a correction in the market anytime later on this year. Do I expect to see one? At this point, I do not. And again, this is not because of any, gurus out there flashing warning signs. It is purely based on my own personal financial situation that I am in right now. But overall here, as you can see, the 30-day yield on this is just 0.34%, and the expense ratio is 0.18. So the actual yield is going to be around 0.2%, which is pretty similar to what you're going to make from a traditional, online savings account at this point in time. So I didn't want to bother with taking that money out of the portfolio, and rather than having it sitting there in cash where it's earning literally nothing, I tossed it into JPST for some very small yields while it's sitting there. Now, if I decide that I do need that money for any legal fees or things like that, I will just sell that out of the portfolio and move that money over to my bank account. However, I think the more likely outcome is that I don't end up even needing that money, and then later on this year, probably towards the fall, once I have more money saved up and I've paid off some of these different bills and stuff that have come up, at that point I'll probably take the ice off that 50 grand, take it out of bonds, and put it back into my dividend portfolio. So the way I look at this here, guys, even though there is still a way to lose some money with these bonds, it's kind of like putting 25% of my portfolio on hold. It's not really going to go up. It's not really going to go down in value. I probably will miss out on gains by taking it out of these stocks, but if we were to see a massive correction with the stock market, that would not be a financially wise position to put myself into, where I then have to sell off stocks at an undesirable price in order to pay legal fees. So anyways, guys, that is why I have went ahead and made that decision and rotated that money over into bonds. And I will, of course, keep you updated if I decide to sell them or, whatever else happens there related to this house situation. I'm probably going to do a full video on it too, just because I feel like there's a lot of lessons to be learned here. And lastly, also, just out of curiosity, if anybody watching this happens to be a civil attorney in South Florida, or you happen to know one, I am having a little bit of difficulty finding an attorney. I've talked to a couple different ones here and there, but if you guys happen to have a referral, feel free to shoot me a message on Instagram at Ryan Scribner Official. That would be greatly appreciated. But anyways, guys, that is going to wrap up this video. That is my update. If you want to check out M1 Finance yourself, there is a affiliate link down below, or there is a completely free 30-minute video training as well, where I'm going to walk you through step-by-step how to get started with M1 Finance. But anyways, guys, that is going to wrap up this video. Thank you so much for watching. I'm going to keep you updated on all of this and the whole house situation. And as always, guys, I hope to see you in the next video.